Take a position only when you know where your profit goal is and where you are going to get out if the market goes against you. Follow your plan. Once a position is established and stops are selected, do not get out unless the stop is reached or the fundamental reason for taking the position changes. Recognizes that fear, greed, ignorance, generosity, stupidity, impatience, self-delusion, etc., can cost you a lot more money than the market going against you, and that there is no fundamental method to recognize these factors. When you go stale, get out of the markets for a while. Trading futures is demanding, and can be draining especially when you're losing. Step back, get away from it all to recharge your batteries. Beware of all tips and inside information. Wait for the market's action to tell you if the information you've obtained is accurate, then take a position with the developing trend. Be more careful if you're extra smart. Smart people very often put on a position a little too early. They see the potential for a price movement before it becomes actual. They become worn out or tapped out, and aren't around when a big move finally gets underway. They were too busy trading to make money. If you are just getting into the markets, be a small trader for at least a year, then analyze your good trades and your bad ones. You can really learn more from your bad ones. Use technical signals, charts, to maintain discipline. The vast majority of traders are not emotionally equipped to stay disciplined without some technical tools. Carry a notebook with you, and jot down interesting market information. Write down the market openings, price ranges, your fills, stop orders, and your own personal observations. Reread your notes from time to time, use them to help analyze your performance.